Hi, this is Lara at Elliott Wave Gold with an extra video update for you after the session Monday 21st of November has closed. We've got some upward movement. The target's still the same at 1533, which might be met in about 6 months' time. There's some divergence at the daily chart level with price and stochastics and price and RSI to indicate that bears are exhausted. But I've got a new alternate hourly chart for you. If I'm wrong, we could see one more low before gold finally turns, and the target, if we do see a new low, is just 1203. Let's have a look. A new high above 122162 would add confidence in a trend change. We'll see why when we get to hourly charts. From the low at 1046 in December 2015 to this high up here, the structure subdivides best as a three-wave zigzag. Now this could be the first zigzag in a double zigzag for an A wave, or it could be the entirety of a correction over here, and that's what the alternate looks at. Either way, we've had a trend change here and some downward movement. If we're looking at a double zigzag, then here we're looking at the beginning of the second zigzag in the double, labelled primary wave Y. It will reach equality in length with primary W at 1533. Primary X within this double zigzag itself is also labelled a double zigzag. Within multiples, within W, Y and Z waves, those waves can only be labelled as simple ABCs or ABCDE in the case of triangles. You can't label multiples within multiples, but X waves can be any corrective structure including a multiple. This is because there is a rule that states the maximum number of corrections within a multiple is 3. So to label W, Y or Z themselves W, X, Y, X, Z increases the maximum beyond 3 and violates the rule. The rule does not apply to X waves, otherwise the maximum number would be 5, not 3. This X wave fits neatly as a double zigzag. We have a 535 first zigzag in the double, joined by a 3 in the opposite direction labelled X, and another 535 zigzag complete down here. The structure is all complete at the hourly chart level, and so this wave count expects a trend change for gold. Let's have a look. I've got two hourly charts. The first one sees B as a triangle over here, this point here. A is the same for both of my hourly charts. If B was a regular contracting triangle over here, then this is where C begins, and so it makes a difference to whether or not we see C complete. If C begins here, then it fits as 1, 2, 3, 4, 5, a complete 5-wave impulse, and so we may have had a trend change down here and a new wave up to last about 6 months for gold at this low right down here, which is pretty close to the target we had at 1204. If we're looking at a zigzag unfolding up, then intermediate wave A within it should subdivide as a 5-wave structure, and within that, minor wave 1 must be a 5. If we have a new trend lasting a few months here, then we should see a clear 5 develop upward at the hourly chart level. We don't have that complete yet. We might have a series of 1, 2, 3 overlapping first and second waves. Just a note about the spike here on the bar charts data, I'm not seeing it on my broker CMC Markets data, and other members aren't seeing it on their data either. I suspect that this is anomalous, that bar chart may see this removed in the next 24 hours. I'll keep an eye on that. Either way, I don't see from this low to either this high or this high a complete 5 up. I can see a 5, 3, 5, 3 and possibly another 5. And so we don't have a complete minor wave 1 upward. When it's complete, then minor wave 2 down should be expected to be a very deep correction. It should be really confusing, convincing us that there hasn't been a trend change. Minor wave 2 can't move beyond the start of 1 below 1204.05. Let's have a look at another idea. It's all the same to this point here. Minor A is still seen complete down here. And what if minor B was a zigzag 5, 3, 5 complete up here? If that's the case, then minor C could have begun here rather than here. Now it makes a difference to whether or not the structure of minor wave C is complete. If it began here, we could have 1, 2, 3, 4 and needing the final 5th wave down. If the 4th wave ended at this spike here, then it's remained just below first wave price territory. If it continues further, it can't move above 1221.62. Any movement by any amount at any time frame above that invalidation point would invalidate this alternate, and that's why we'd have more confidence in the main wave count. The target is 1203 for minute wave 5 to reach 1.618, the length of minute 1. There's no Fibonacci ratio here between this first wave and this third wave, so it is more likely that the fifth wave will exhibit a ratio to either the first or third, and it's most commonly going to be a ratio with the first. The most common ratio is equality with the first, but in this instance that would see the target truncated. That's unlikely, so the next likely ratio is 1.618, the length of the first wave. This is a channel drawn using Elliott's technique from 2 to 4 with a copy on 3. The fifth wave may end about midway within that channel, and so it is possible that we're going to see just a slight new low for gold. There's a lot of weakness to this downward movement down to this last low here, and so if we do see more downward movement at this stage, I'm expecting it won't be by very much. At the daily chart level, this is an alternate. Now remember, I said from that low back at 1046 in December 2015 we had a 535 zigzag structure up complete. What if that is the whole of the correction and gold is still in a bear market? That is entirely possible. If we've had a trend change here at cycle degree, then at the daily chart level we need to be seeing a 5-wave structure develop downward. There is too much overlapping within all of this movement to see an impulse complete downward, but we can see a leading expanding diagonal complete downward. Within a leading diagonal, subwaves 2 and 4 must subdivide as zigzags. Subwaves 1, 3 and 5 are most commonly zigzags, but sometimes they may also appear to be impulses. In this case, they're all the most common structure, zigzags. So that's why you see this third wave labelled ABC. That's the only structure in which a third wave will be labelled as anything other than an impulse. Within a diagonal it will be. The wavelengths meet all the rules for an expanding diagonal, but here's the problem. First waves most often subdivide as impulses. Sometimes they do subdivide as leading diagonals, and when they do, they are most commonly contracting. So this wave count doesn't rely exactly on a rare structure, but it really isn't a very common structure anyway. I've learned to be very wary of seeing a leading diagonal to begin a new movement if you expect you've had a trend change, because invariably it turns out to be wrong. So I am approaching this wave count with a healthy dose of skepticism. I don't think it's very likely, but we need to always consider all possibilities. But here's the other important implication. If we have a complete 5 down from this high to this low, then we're looking at a really deep correction, so there's no difference in the expected direction for either of the wave counts for the midterm. Primary 2 should last a few weeks, and it should be very deep, deeper than the 0.618 ratio, because it's following a first wave leading diagonal. After those, the second waves are usually very deep. It should be a big, obvious 3-wave structure, and so structure is going to be the only way we can tell the difference at this stage between this alternate wave count and the main wave count. If we are going to get the upward movement I expect, if it subdivides as a big 3-wave corrective structure, then this alternate would substantially increase in probability. Primary 2 may not move beyond the start of 1 above 1374.81. Any movement by any amount at any time frame beyond that invalidation point would firmly invalidate this wave count. Those Elliott wave rules, all of them bar one, are absolutely black and white. I'm not going to go over the classic analysis at the weekly chart level except to draw your attention to this trend line on balance volume. It works pretty well with trend lines. Now it allows for just a little bit of downward movement, but not much. There's some good support here. This line is reasonably long held, doesn't have a big slope, but it's only been tested 3 times, so it doesn't have very strong technical significance, just reasonable. At the daily chart level, from stock charts data, we've got a small upward day, a slight higher high and a higher low meets the definition of upward movement, but it's got a long upper wick. That's since disappeared on my bar charts data as prices started to move a little bit more strongly higher. But on stock charts data here, it looks like we've got a corrective day. It's come on a decline in volume. It looks like at this stage that we might still have a downward trend in place, and so that's why I've got that second hourly wave count for you, which allows for gold to make one more slight new low. If it does that and we see a little bit of short-term divergence with RSI and or stochastics, then I would have a lot of confidence we probably have a low in place. At this stage, between this low here, I think that's the 7th of October, and this low here, I think the 14th for 17th of November, we've got a lower low from price and a slightly higher low for RSI and a slightly higher low for stochastics. So this is some regular bullish divergence. It tells us that this downward movement from price has some weakness. It's telling us that the bears are becoming exhausted. It doesn't tell us we have to have a low in place here. Divergence is a warning, not definitive. There's no close by support line from on balance volume for at the daily chart level to halt the fall in price. Price certainly could make one more low before it turns. ADX is still slightly increasing today, still telling us that we have a downward trend in place. But if we do, there's something wrong with it because ATR is declining. That's not normal for a healthy and sustainable trend. Bollinger Bands continue to widen though, and so they're telling us we do have a trend in place. And they're also telling us now, starting to tell us, that after a while of widening or expanding volatility, we're probably going to see some consolidation. Now that actually fits fairly neatly with the Elliott wave count. When gold starts its new trends, it often does it with some hesitancy. I'll expect minor wave 1 to not be particularly long, and minor wave 2 may be a fairly time-consuming and very, very deep consolidation. When gold does that, its second waves are very deep and time-consuming, and they convince us that there hasn't been a trend change, and they do it right before a third wave takes off. I'm aware of that tendency for gold, so I'll keep that in mind. That's all from me at the end of the trading day for members and viewers alike, and I hope that everyone had an awesome weekend.